Argentina's economic growth figures have recently been released, and the results have been truly spectacular. Milei's plan demonstrates that it has worked, with gross domestic product (GDP) growth of 5.8% in the first quarter of 2025 compared to the same period in 2024. Under Milei's leadership, Argentina has positioned itself as one of the Latin American economies with the best expected growth this year. And best of all, this growth has been achieved while simultaneously bringing inflation to its lowest levels in recent years, reaching 1.5%. This is the lowest inflation rate in the last 5 years. We must not forget that controlling inflation was one of the priorities of Milei's government, after years of Argentina having one of the highest inflation rates in the region. The recovery of the Argentine economy is a lesson for other countries, as it shows how reducing public spending can stimulate economic growth, rather than slowing it down, as some economists claim. It demonstrates how when a state is overly indebted, markets and investors lack confidence in the country's fiscal sustainability. And when this situation is reversed, it boosts investment and private consumption. The economy also performed well when compared to the previous quarter. When reviewed for seasonally adjusted growth, GDP growth was 0.8%, but the economic recovery also allowed private consumption to rise by 2.9%, and investment, or gross fixed capital formation, also grew by 9.8% compared to the previous quarter. Looking at the annual growth, consumption grew by 11.6% and investment by 31.8%. These figures demonstrate that the Argentine economy is doing quite well for now, achieving the long-awaited economic recovery, with inflation under control, which is tending to fall. Additionally, there are sectors that have experienced tremendous recovery, such as the financial sector with 27.2% growth, the fishing sector with 11%, the hotel and restaurant sector with 9%, the mining sector with 6.6%, and the construction sector with 6.1%. The so-called chainsaw effort to reduce public spending was initially widely criticized, as the government sought to reduce public spending by 35% at the beginning of the administration. This is equivalent to no less than 5.6% of the gross domestic product, unprecedented measures in the history of Argentina and most countries in the region. Indeed, some analysts predicted that this tremendous spending cut could lead the country to a crisis and a long-term recession, a situation that has not yet occurred. Although the economy contracted in the first quarters of Milei's administration, it quickly grew, demonstrating that fiscal adjustment ultimately fosters growth. Another measure that has allowed Argentina to return to a viable economy was the lifting of the so-called currency controls, which imposed government restrictions on the purchase and sale of foreign currency, primarily dollars. These restrictions were implemented at the time to prevent capital flight. For some analysts, Argentina was not previously viewed as a destination for foreign investment, partly due to the currency controls, and also due to distrust in its fiscal management. While some consider the lifting of the controls risky, it has been successful so far, as the government reached an agreement with the International Monetary Fund and other international entities to secure a $20 billion loan. This would allow it to accumulate reserves to ensure the lifting of the controls would be carried out with guarantees of sustainability and ensure that monetary restrictions would not be necessary again in the future. With this measure, the government allowed people the freedom to buy and sell dollars without restrictions. But without a doubt, the spending cuts have been fundamental to restoring the country's credibility as an investment destination. At first, the adjustment was painful, leading to the reduction of 47,982 public sector jobs, resulting in annual savings of $1.885 billion, and the reorganization of more than 40 state entities. Another reduction has been in energy subsidies, which have fallen to approximately $4.4 billion annually after reaching levels of $12.3 billion in 2022. To get an idea of the cut in public spending, we can see how it went from 38% of GDP in 2023 to 31% in 2024. This tremendous reduction in spending has allowed Argentina to go from having double-digit deficit levels observed in 2022 and 2023 to a surplus of 3.8% in 2024 and an expected surplus of 2.4% in 2025. Thus, Argentina has become one of the few countries in the world with a surplus in 2024, along with Denmark, Norway, and Australia. Another positive effect of the measures taken has been a reduction in J.P. Morgan's YMBI, Country Risk Index, which assesses the likelihood of a country defaulting on its financial obligations. This index had consistently hovered above 1,000 points in recent years, even approaching 3,000 points by mid-2022. It recently hovered close to 700 points, demonstrating how country risk has been declining significantly after fiscal adjustments and avoiding issuing currency to finance the deficit. The Milei administration is seeking to ensure that so-called mattress dollars enter the economy to continue driving growth and investment. According to the National Institute of Statistics and Census, it is estimated that approximately $246 billion of Argentine savers are outside the banking system. This money corresponds to savings of thousands of Argentines who are unsure of having their resources in Argentine pesos due to historic devaluation and loss of value of the currency. For example, in 1975, the government's economic measures led to a 100% devaluation. As if that weren't enough, the currency's scarce credibility plummeted when, in 2001, the then Minister of Economy, Domingo Cavallo, restricted Argentines from withdrawing their savings in dollars from the banking system. This measure, known as the Corralito, is still remembered, increasing the lack of credibility of the Argentine peso. Indeed, Milei has sought to restore credibility in the currency by not allowing currency issuance to finance the state's debt. In May, the government announced that it would allow people without declared savings in dollars to purchase a home for up to $43,000 or invest up to $85,000 in fixed-term deposits in the formal banking system without needing to justify their origin. But the most important thing is to try to review how all this has affected the markets, the stock market, and stocks. On the one hand, in a recent video, we saw how the Argentine stock market has had the best cumulative performance over the last 3 years, with a staggering 184% cumulative return over this period. Now, when reviewing performance of the Argentine stock market and its main index, the Merval, several important elements can be observed. On the one hand, we can see how the tremendous recovery began in 2022, meaning that the markets are anticipating events. We can even see how, in 2025, the Argentine stock market has not had as positive performance as in previous years. This means that the market was already anticipating a change of direction even before the election at the end of December 2023, and began to project that Milei's proposals could lead to an economic recovery. A rather interesting element was how the renowned investor Stanley Druckenmiller decided to increase his positions in Argentine companies, going from an initial position of around $30 million to more than $280 million recently. Druckenmiller explained how he decided to invest in Argentine companies in May 2024 after listening to Milei's speech at the Davos Fund. He understood that the president was taking the appropriate measures to get the country back on track for growth, in addition to reducing the enormous fiscal deficit and moving from a primary deficit to a surplus of 3%. But one fact that further motivated Druckenmiller to invest in Argentina was seeing how Milei, in addition to having capacity and leadership to make the right decisions, was a man with a great ability to express his ideas, which would possibly allow him to have sufficient support among the population for the appropriate amount of time to achieve the expected results. After that, he reviewed the 5 most liquid ADRs on the Argentine stock market. The legendary investor made purchases in companies such as Mercado Libre, the Galicia Financial Group, Banco Macro, the oil company YPF, and the Argentine stock ETF. In the case of YPF, Argentina's leading oil company, for example, its ADR value has multiplied more than 5-fold, considering share prices in 2022. Another company where Druckenmiller made significant purchases was Mercado Libre, specifically with the increase in positions starting in May 2024, despite the stock's already significant recovery. This action has allowed him to achieve an excellent return, and so far, according to the latest transaction report, he has not yet sold any shares in the company. Several conclusions can be drawn from Argentina's recent history. On the one hand, while some countries may be seen as off-limits for investment, with some adjustments, especially in the area of spending cuts, they can become investment opportunities, as their stocks often trade at prices below their fundamental value. But it is also evident how significant knowledge of macroeconomics is required to identify these investment opportunities, as was the case with the great Stanley Druckenmiller, and have the determination to buy despite the potential risks. Another important conclusion is that valuable investment opportunities can be found in the so-called emerging markets, where shares of companies are sometimes traded below their fundamental value, but which are undervalued and not on the media's radar. Currently, there's uncertainty about how much the U.S. government's high debt could affect the credibility of the fiscal stability of the world's leading economy. Argentina's dark past can serve as an example to help avoid such a situation. While the equity markets have not been affected by the high U.S. debt level so far, Argentina's past situation, with its irresponsible management of its debt and deficit at the time, can serve as a catalyst to avoid the excesses in countries whose debt levels are growing alarmingly. Another video will examine whether other Latin American and emerging countries have the potential to follow Argentina's lead and offer stocks with the potential for appreciation in the event of a change in the management of their economies. Remember that in the video description, you'll find a link to the best course to learn technical and fundamental analysis for investing in stocks. There's also a link to the best platform for buying stocks on the U.S. regulated stock exchange. If you enjoyed the video, give us a like, subscribe to the channel, and share the content.